Julenn Keeling here, Associate Broker with Berkshire Hathaway Home Services, Towne Realty, and as always, I'm presenting options and producing results. Welcome to Chapter 100 in my First Time Homebuyer series, and today we're going to be discussing what not to do when you're buying your first home. So, tip number one is do not finance any type of automobile, whether that be a truck, a car, anything with wheels. Just do not finance it. The main reason is that it can drastically change your debt to income ratio or your DTI. And in lender land, this will significantly impact how much house that you can qualify for. It's one of those things that if you finance a car, you can't take it back. Once it's done and you're stuck with it. The only alternative is that you would have to pay it off. And for most people, that just is unrealistic. So whatever you do not finance an automobile either right before you're about to buy a home or during your purchase of your home. Tip number two, do not finance any furniture. I know it's really tempting. There's really good sales and all of that. But even though you found your perfect house, do wait until after closing before you buy any furniture on credit, because this is something that can also change your debt to income ratio. And depending upon how much furniture that you may buy, it may actually keep you from qualifying for your perfect house, and then you won't have any place to put the furniture in. Moving right along, we have tip number three, which is do not stop making your rental payments. No matter how much you may hate your landlord and disagree with some of the policies and procedures that they may have, and that may actually be a reason why you do want to buy your first home, at the end of the day, you are still bound by whatever lease that you signed initially when you moved in. Therefore, it is also important that you read your lease to see if there are any early termination and/or lease break fees. These fees, along with your rent, have to be current, and they will also have to be paid in order for you to close on your home. The lender is going to check at least once and probably twice that you are current and in good standing with your landlord, and they're not going to be sympathetic as to the reason of why you're not. And no matter how close to closing that it is, you still need to make your rental payments on time. I've actually seen where the buyer thinks that they've gone all the way through underwriting, everything is done, and then right at the end, the lender will maybe do a final verification of rental history, and then at that point, they will no longer qualify for the loan. So definitely always remain on good terms and in good standing with your current landlord. Tip number four, do not quit or change jobs or become wholly self-employed, even if the job is a better one in which you'll be making more money and/or have additional benefits. This change in employment can create all kinds of red tape in underwriting and in the loan process. Make sure to not become wholly self-employed at this time to pursue your lifelong dream of basket weaving. And the reason for this is the self-employment income that you would be claiming at that point is going to be a gazillion times harder to document than if you're just receiving your regular paycheck. Tip number five, do not pay off or pay down any debt. Keep everything on autopilot. Even though you may be well-intentioned, this can actually have a negative effect on your credit. It is best to consult with your loan officer to figure out what you should pay off, when you should pay it off, and how you should pay it off. Tip number six, do not open any new credit lines or cards, and also be sure and keep any ones that you currently have in good standing, and be sure to not fall behind or miss any payments. When you're opening new credit, they will pull your score, and every time someone pulls it, it can actually have a negative effect and decrease your score. So you definitely don't want to have a reduction in your credit score when you're in the process of buying your home. Tip number seven, do not cosign for anyone for anything. This is usually, in general, a really bad idea, but when you're buying a house, it's an especial no-no. And the reason is, whatever they may charge will be a direct reflection on your DTI. Also, if they don't make their payments or if there's any late payments, then all of those will actually have a negative effect on your credit score, and it will be as if you are the one that has missed these payments. Do not co-sign for anyone for anything. Tip number 8, do not spend any money that you have saved for closing, even if you are getting seller concessions. You never know if there might be a last minute change and you actually end up needing those funds. The lender will sometimes require that you have X amount of funds available on hand in reserves. Of course, they will check initially, but then they also may do a re-verification of funds in which you have to provide updated bank statements to show that the funds are still available and there. Therefore, make sure you do not spend any potential money that you may need for closing. Tip number 9, do not make any large deposits into an account in which you're using for your loan transaction. This also includes any accounts that you may have used to verify your EMD or earnest money deposit, as well as any down payment or closing costs accounts. The lender is going to ask you to verify any large deposits, and depending upon the lender, it could be as little as $50. So if your rich uncle just so happens that he wants to give you a significant amount of money, call your loan officer first and ask him how best to document it before and not after to avoid any hiccups. Last but not least, tip number 10, do not have any insufficient funds or overdraft fees. To your lender, this is going to look like you aren't able to manage your current debt obligations and the funds that you have. With them doing your final approval for a loan, it's going to be more difficult for them to do so because you're going to be taking on additional obligations, and it's going to be a significant one in the way of your mortgage. Be sure to keep an eye on all bank accounts and make sure that you have all of your bills and money going where they need to be. Congratulations, you've made through all 10 tips of what not to do when purchasing your first home. I hope you enjoyed the content and learned a little something along the way, and if so, please like the video and comment below and consider subscribing. I will be putting out weekly info for this first time home buying series, and I'm happy to provide any info as well as answer any additional questions that you may have. Thanks again, and I look forward to connecting with you soon. Bye!